Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Huge episode for you this weekend, so let's start out with a minefield of calendar events for the Hedgies, prime brokers, and market makers. My subscribers that follow the show closely know that I made my calls. I told you to expect drama and manipulation in the open on this past options expiration Friday, and we sure got it. It was disgusting. I also said weeks ago we'd be trading higher going into the annual shareholder meeting, and AMC is up over 31% over the past month. So Wednesday, November 8th, annual meeting of stockholders, 2 o'clock. Thursday, November 9th, international advance ticket sales for Renaissance, a film by Beyonce, will begin. Why is it important? We're not just an exhibitor of that film, we're a distributor. So we're going to get a cut of the action on those international ticket sales. Also on Thursday, initial jobless claims. Anything to do with jobs, we have to keep an eye on. Why? That was the last thing the Fed had to kill, the job market, before it could stop raising rates. And I think we're finally getting there. Friday, November 10th, the Marvels, also Veterans Day. Okay, should be huge for us. Friday, November 17th, Trolls Band Together, and the new Hunger Games drops, along with a horror film, Thanksgiving. Wednesday, November 22nd, Sony Pictures will release Napoleon, and Disney's Wish is going to drop same day. Thursday, November 23rd, Thanksgiving. Holidays are big for us. I'm going to cover that as we go through this. And Friday, December 1st, Beyonce's film drops. Guys, that's a lot of drama for our enemies to deal with, and it just keeps getting better. So, Uncle Frank, are you worried? No. Good news and chaos are my friends. I'm not short billions of synthetic shares. I'm not leveraged to my eyeballs like 40 to 1. I'm not so desperate I have to pay idiots to write hit pieces every day on a theater stock. That's them. That's not me. I'm not misusing dark pools and algos. I don't have market makers spoofing and layering the stock every day just to keep it under control. What I need you guys to do is participate in the survey at AMC Project Popcorn on Monday when your broker is open. Get it done just in case we get an opportunity to introduce it into the conversation at the shareholder meeting. Imagine if the analysts on the call hear that the average shareholder before the split owned 550 shares apiece. That would mean there were over 2 billion shares out there. How are you going to explain that away? You can't. Okay, now let's start covering what's not on the calendar but can impact the AMC trade. I hope you can appreciate how serious this actor's strike really is. Hollywood has been shut down for over 100 days and has lost over $5 billion. So let's peek at the latest headlines on the strike. From Deadline, studios deliver new contract offer to SAG-AFTRA. More talk set for this weekend. CBS News, union reports no progress on efforts to end the actors' strike. And then from Variety, Hollywood studios deliver offer they hope will end the SAG-AFTRA strike. If this thing isn't resolved soon, it will delay upcoming releases, and our enemies can use this to spin the narrative. And now, for the first time, I'm seeing news items that reveal how this could hurt us if the strike continues. From Screen Rant on your right, How to Train Your Dragon live-action remake release delayed due to actors' strike, but not by much. Now, the other side of this coin is we may get a positive reaction in the stock when the news breaks the actors are going back to work. I'm hoping this happens by Wednesday, right before our annual shareholder meeting. This is what we want to see. Net outflows from hedge fund industry totaled $80 billion for the year to October 18th, despite net profits hitting around $119 billion, according to a report by Reuters. Pay attention to this headline from Reuters. Hedge funds caught in crowded trades suffered in Thursday's stock rally. From the article, global hedge funds using algorithms to trade stocks endured one of their worst days of the year on Thursday, a Goldman Sachs note on Friday showed. A sign that a sharp rally in shares on hopes that global rate hikes are over caught some off guard. Systematic fund managers, particularly those which had short bets on highly traded stock names, got caught trying to get out of crowded trades and found themselves stuck in losing positions, Goldman Sachs said. Subscribers to this channel know that Uncle Frank always reminds you to hope for white swans as well. A surprise, face-melting rally can do considerable damage to a predatory short hedge fund. But don't worry, I didn't forget my Black Swan watchers. Citizens Bank becomes the 5th U.S. bank to fail in 2023. The banking crisis continues in the U.S. as another regional American bank shuts shop. The government has shut down Citizens Bank due to financial issues, allowing the FDIC to take control without providing any public warning. Citizens is the 5th bank to fail among Heartland Tri-State, First Republic, Signature Bank, Silicon Valley, and First Citizens Bank. Here's hoping scumbag Citibank is next. And what's this all about? Chase, Wells Fargo, and Bank of America direct deposit crash left people with no pay? B of A, Chase, and U.S. Bank customers are still fuming after a system crash left them waiting for their direct deposit payments, paychecks, and transfers to be processed. This chaos in the U.S. banking system happened Friday morning due to a manual error. Angry customers who were expecting their payments have taken to social media to vent their frustrations as bills and other responsibilities hang in the balance. The issue that caused confusion and left hundreds wondering about their bank accounts on Friday was due to a single human error at an organization called the Clearing House. The Clearing House is a banking association and payments company owned by the largest commercial banks in the United States. Guys, the theaters are not dead. They may even experience a renaissance. Remember that theaters do great during recessions and wars, and people may put off a vacation when things are tough, but things like Starbucks, coffee, and entertainment have an inelastic demand curve. People refuse to give up what I call affordable luxuries. Look at this headline from CoStar. Restaurants, movie theaters expected to see uptick this holiday season. Americans are putting experiences, not just gifts, on their wish list, JLL says. From the article, restaurants and other retail venues, such as movie theaters, have reason to celebrate this holiday season. Americans say they intend to boost their spending on experiences in the festive period rather than just buying gifts. Quote, more than 90% of respondents plan to enjoy at least one holiday-related experience. 65.5% plan to dine out. And here it is, 43.7% plan to go to the movies, almost twice what they planned last year, almost double. That's good news for us. Did you guys know we've got a new Planet of the Apes movie coming out? From Screen Rant? Kingdom of the Planet of the Apes. Release date, cast, story details, and everything we know. The Planet of the Apes reboot franchise is getting a 4th film, courtesy of its new owner, Disney. From the article, the 4th movie in the reboot series is set to release on May 24, 2024, continuing the story of intelligent simian descendants navigating their dominance on Earth. Wouldn't it be funny if 3.8 million apes each bought only 52 shares on the day this movie drops? That would be nearly 198 million shares, or the entire float. We could end up buying the entire float for the 4th time. This, of course, is not investment advice. I'm not telling you to do that. I'm not a financial advisor, and I will never tell you to buy, sell, or hold any security or cryptocurrency. I'm just wondering why we have to follow all the rules and Wall Street doesn't. And breaking news from Collider. Five Nights at Freddys hits major milestone in quiet weekend at domestic box office. Universal's Five Nights at Freddys had a massive first week at the box office, setting records and surpassing 100 million domestically and 150 million worldwide. The film defied poor reviews and a simultaneous streaming release to become one of the few movies to reach 100 million domestically while on streaming platforms. Universal, you're leaving money on the table. Release the film exclusively in theaters first and then put it on streaming. I thought these people were supposed to be smart. I don't know about you guys, but I'm sensing a pattern here. Martin Scorsese's Killers of the Flower Moon has surpassed 100 million at the global box office, solidifying its success in its third week. You may have heard about the rumor going around that Adam Aron was being replaced by Adam Sussman, one of our board members. I think someone just picked the wrong Adam for listing our CEO, but it can't hurt to acquaint yourself with this guy just in case. He's got a very impressive resume. You could read about it at AMC's website. He served as president of Epic Games since January of 2020. Prior to that, he was appointed by Nike as their first ever chief digital officer. He was head of Nike's global strategy and corporate development. Now, like every single one of our board members and senior management team, this Adam hasn't purchased a single share of AMC in over 5 years, but did manage to sell over $713,000 worth of our stock to us. So he certainly qualified. He just joined our board in May of 2019. You heard that right. This Adam joined our board only in May of 2019, and in his first year of service, we paid him over $46,000 in stock and $133,000 in cash, totaling just under $180,000. But then in 2020, the year of the pandemic, when our theaters were sometimes closed down, when we were being starved for films to release, when in April over 18,000 people died and there were more than 500,000 confirmed COVID cases in under 4 months, we pumped up little Adam's comp plan to over 221,000. Now, his bio doesn't catalog all his contributions to AMC's business, but in 2021, to thank him, we pumped up the comp plan again to 331,000. And on June 9th of this same year, little Adam Sussman sold $713,000 worth of our stock for over $52 a share. It's like he knew something we all didn't. I don't want you Adam Aron fanboys to worry. I don't think your hero is being replaced just yet. But if he is, little Adam will milk this company as hard as Big Adam ever did. I promise. Speaking of our board and replacing Adam Aron, by now you all know this headline from CBS News. AMC CEO Adam Aron shared explicit photos with women who then tried to blackmail him. Why did this news come out while AMC was blowing it out of the water? I still don't know. It's suspicious, but there is something else we need to consider now that Adam and the company are being sued for breach of fiduciary duty. From the article, the executive took to social media on Thursday after the news website Semaphore published a story detailing an extortion attempt of Aron by Sequoia Blackwood, a New York woman who pleaded guilty to a federal charge of cyberstalking this summer. Blackwood started texting Aron in March of 2022, calling herself Mia and sending him photos of a 17-year-old Russian model that she presented as herself, according to court documents. So that's catfishing. Aron mistakenly believed her to be a ballerina, that had done, quote, unmentionable things to him in the past relationship. And Blackwood did not dispel him of the notion. Instead, she asked him to send explicit photos, and he complied in a weeks-long exchange. Now, what was going on in March of 2022 when Adam was sending explicit photos of himself on his phone? That's right. He was investing in a bankrupt gold mine. In the same quarter, AMC lost $337 million, and we had long-term debt of $5.52 billion. Adam was investing in a non-income producing asset. You remember the headlines. AMC Theaters buying $27.9 million stake in gold and silver mining company Hycroft. CEO Adam Aaron notes, to state the obvious, one would not normally think that a movie theater company's core competency includes gold or silver mining. I would agree. Okay, guys, let's get our receipts in order and then we'll move on, I promise. From June 2021, Mudrick Capital takes massive hit on AMC shares as short bet backfires. March 2022, AMC announces significant investment, buying 22% of Hycroft Mining. October 2022, an investor sued Hycroft Mining, claiming the struggling mine operator, which went bankrupt in 2015, merged with a blank check company in 2020 and became a meme stock after AMC bought a stake, right? And now a brief definition of fiduciary duty. A fiduciary duty typically arises in cases in which one party has an obligation to act in the best interest of another party, such as a corporate board member's duty to company shareholders. A breach occurs when a party fails to fulfill its fiduciary duty to another party. So guys, let's review. Adam is busy sending explicit photos of his junk and subsequently being blackmailed, all while investing almost $30 million of our badly needed dollars in a previously bankrupt gold and silver mine. He has no precious metals mining experience, to my knowledge. We lost over $337 million that same quarter, and we were over $5.5 billion in debt at the time. Now, of course, we never got to vote on this investment. The people that own the company, the shareholders, weren't asked our opinion on the matter. But let's look at the Hycroft 10Q from the same year. Hycroft Mining, formerly known as Mudrick Capital Acquisition Corp., and its subsidiaries, is a U.S.-based gold and silver company that is focused on exploring and developing its wholly owned Hycroft mine. So, I guess what we're doing is we're investing money in a company formerly known as Mudrick Capital Acquisition Corp. that was so short AMC less than a year before, they almost went out of business. Okay? But from the 10Q, in the first quarter of 2022, the company completed an equity private placement and an at-the-market public offering program, an ATM program, that raised gross proceeds of $194 million before issuance costs. The company plans to use a portion of the proceeds from those equity offerings to conduct additional exploration that will focus on the higher grade opportunities identified during 2021's exploration drilling and a systematic approach to develop a better understanding of the Hycroft mine deposit, including potential feeder systems, right? Okay, as of September 30th, 2020, the company had net working capital of $155 million, which is expected to provide it with the necessary liquidity to fund its operating and investing requirements. Now, here's the good part, and future obligations as they become due within the next 12 months from the date of this filing. So what I'm hearing is we've got some bills to pay and they're coming due soon, right? While the company has continued to process gold and silver to partially offset the cash that is projected to be used in its operations and investing activities, the company does not expect to generate net positive cash from operations for the foreseeable future, right? Accordingly, the company will be dependent on its unrestricted cash and other sources of cash to fund its business. Okay, I'm hearing we're not going to be making any money anytime soon, right? On March 2022, that's the time we're talking about, the company entered into subscription agreements with AMC and Ontario Limited, an entity affiliated with Eric Sprott, pursuant to which the company agreed to sell an aggregate of, I think, 46 million units at a purchase price of $1.19 per unit for gross proceeds before deduction of fees and expenses of $55 million. Okay, so we're in at $1.19, right? Don't forget that. Now, the document goes on to explain they're going to use some of the proceeds to buy equipment, but here's where it gets really interesting. March 2022, the company entered into an amendment to the 10% senior secured notes with certain direct and indirect subsidiaries of the company as guarantors, holders of the 10% senior secured notes, including certain funds affiliated with or managed by Mudrick Capital Management, White Box Advisors, Highbridge Capital Management, and Aristia Capital. The note amendment amends the note exchange agreement dated as of January 13, 2020, and the subordinate notes issued thereunder in order to extend the maturity date of the subordinated notes from December 1st, 2025 to December 1st, 2027. Okay, so it seems like we're paying down and restructuring some debts with our lien holders and pushing out maturities. But while I'm concerned about the timing of all this, I'm equally suspicious of the lien holders listed here. Do you find it odd that every single lien holder here was or is short AMC? Well, we know Mudrick Capital was. We know White Box Advisors. I mean, their 13F 2 years ago was over 559,000 shares short. Highbridge Capital Management looks like they own twice as many puts as they do calls on AMC. They're owned 100% by JP Morgan. They used to manage money for Jeffrey Epstein too. And Aristia Capital, as of August, has puts against AMC. Is it just me, or were the guys losing money shorting AMC the same guys that might lose money on their Hycroft bonds if we don't invest in the company? Adam invested in a bankrupt gold mine that was formerly a Mudrick shell. And Mudrick, just a year earlier, almost went out of business. They were short so much AMC. I have just one question for you. How is any of this in our best interests as shareholders? Now, guys, Adam Aaron never asked you if you wanted the ape. You know, the pounce, our preferred share. That was fashioned as a dividend. It was declared. Furthermore, he never sought your permission to invest your money in Mudrick Capital Acquisition Corp., now known as HFT Mining. Well, there's the weekly chart of HYMC. As most of you know, Hycroft has been struggling, especially since Adam invested your money in it back in March of 2022. It's down over 60% just this past year. And according to Macro Axis, it has over an 81% chance of going bankrupt. Which institutional investors are shorting HFT Mining? As of the most recent reporting period, I see only one: Citadel Advisors. Here's an article from back in 2020, New York Times. Hedge funds made hundreds of millions shorting mall stocks during the pandemic. One of the most talked about movies of 2015 was The Big Short, which tells the story of how hedge funds made heaps of cash off the mortgage crisis of 2008. Were a sequel to be made this year focused on the financial side effects of the flu pandemic, it most likely would be called The Big Mall Short. According to a report in the New York Times, Apollo Global Management made more than $100 million shorting CMBX6, commercial mortgage-backed securities with a strong exposure to malls. Mudrick Capital and Deer Park Capital were estimated to have banked about the same amount working that same game. Guys, if you want to know more about the unusual connections and relationships regarding Mudrick, Apollo, and Adam Aaron, start here with this article. I think you'll throw up. Adam served as senior operating partner of Apollo up until about March of 2017. On your screen, you can see AMC's 5-minute chart from options expiration Friday, perfectly normal trading day on the Tijuana Stock Exchange. AMC rallied to a high of 1130 on Cinemark's Q3 earnings beat. When the shorts had had enough, they put up 9 red 5-minute candles in a row on no news, just because they can. There was a fierce secondary push towards the close, and you could see both highlighted by the 2 arrows. Amy finished at 10.72, up 23 cents or 2.19%. After hours, she clawed back another 10 cents to finish the session at 10.82, up 0.93% after dark. Ripple celebrates another SEC loss. Ripple's chief lawyer took to the X social media platform to celebrate the SEC's most recent defeat, highlighting the Second Circuit's decision in SEC versus Goville. The attorney stressed that the SEC cannot demand a substantial disgorgement award without first substantiating that investors suffered tangible financial setbacks. This development, succinctly summarized as no harm, no foul, may have broader implications for Ripple's ongoing legal skirmish with the SEC. Bottom line, if the majority of XRP holders haven't faced financial losses, the SEC might find itself cornered, potentially leading to a more favorable settlement for Ripple. Hey, it's a meme stock, right? There's going to be memes. Here's my new favorite depicting Sam Bankman-Fried in jail in Brooklyn awaiting sentencing. Since you're facing over 100 years, Sam, it might be time to start ratting out everyone on that tokenized AMC scam to get a more favorable sentence. Sam, your new name is Caroline. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.